Good day, guys. I would like to take you through the trade setup for this week. I took a trade on Audcad and I'm here to discuss it with you. Welcome to Prime King Trading Institution YouTube channel. I hope you guys get more information here and you are able to learn more content from this channel. And can you please like and subscribe? Make sure you like and subscribe, guys, so that you can have more content coming up and you can be able to learn as much as you can, from this channel. So I'm gonna take you through a trade which I took this Monday with my team. What I'm looking at here, I'm looking at this market, which is Audcad. Audcad was coming up nice, making a higher highs and higher lows. It was in an upward trend until the market decided otherwise. Here it broke out, then it came down. This was an ascending channel. Informed it broke the ascending channel, retested the ascending channel, and kept on going down and kept on giving us now lower highs and lower lows. Which means the market has already changed in the direction, or it has already changed this direction to the downtrend. So I started identifying trades here. I managed to scoop something from here to the low. Yeah, but now this week on Sunday I managed to look at this channel, this chart again, and I was able to spot something. I realized that the market was making higher lows and higher highs. So here I was expecting the market to respect this ascending channel and come for the third touch, then it bounced off to the upward side, but it didn't. It broke out, and when it broke out I identified that no, it broke out, retested, then kept on going, and I caught the market here. It was already making correction somewhere here in this areas. It was already making correction somewhere in this areas, which is a retrace or a retest, as some may call it. So what I was able to spot, I was saying, okay, since the market came, broke and retested the structure, it went, now it's retracing. There's a high possibility that this might be a retracement only to the downside, then it goes up. This because looking at the ascending channel and respecting my 90 rule, which I know that most of the times when an ascending channel is broken out, the impulse has to go up until the end of the channel. So I was able to identify this and spot this. So looking at it, what I did is I took my Fibonacci. Then I used the fib to identify what the market was doing. So I realized that at this very spot here, where there was high resistance, the market tested this area a couple of times, so there was resistance. Those who are trading cash support and resistance would have also benefited from this trade. So I identified that the market was at 0.382 of the fib. So what I did is okay, I identified 0.38. So this was my other confirmation. 0.32 is an important point in the fib. Also, this is a very powerful area of resistance. Now maybe it's turning into support. So I had to be able to spot, and I was also confirming, oh, this is the structure, this is an ascending descending channel. So I'm able to identify that the market has to complete the 90 rule, and the market always moves in patterns, and it always completes them time and again. It might be that the market makers may catch us on the wrong side, but they always the market always abide by the pattern. It always finishes what it has started. So I was able to identify here. So I was looking at this pair here, identifying this pair on the H4 time frame. First I looked at it in the weekly. The weekly last week it closed highly bullish because it was this candle. It gave us this candle, it gave us this candle here. So I was able to spot and say, okay, no, the market gave us this candle here. This candle is this tool is refusing to, yeah, it gave us this candle here. So I was like, okay, the market decided bullish. There's no way this candle can just appear. This is a high bullish candle. It was filled and it was dominant. And I realized that this was aiding to my bias, that the market broke out, and I'm able to identify that, what, I'm looking at another candlestick formation here. I'm looking at another bullish candle. Yeah. So I identified the retrace, and when I was putting the market from the low here, I was able to see that this was a the market formed a nice candle here. a nice hammer. Some may call it yeah, some may call it might be a doji. Yeah, in a doji. It formed a rejection here, then it formed this sort of hammer candle. So I knew what the market was doing. This was confirmation for a buy. I knew that the market has to buy. The market rejected. Even coming here, the market was struggling. I could see, you see. So I saw this as a retrace. So I knew that the market has to go to the upside. So what I did is when the market opened, this is how I took my trade. You know, this is how I took my trade with the team. I took this trade from here. I took this trade from here. I took this trade here. Oh no, I didn't take it in the H4. I took it in 30 minutes 15. Yeah, so that you can be able to have a nice risk to reward ratio. So I took this trade here, somewhere here. So I put my stop loss. I made sure that I risk less than 1%. You know, my account. You know, I made sure. So I knew that this trade has to. This was my first target, and it was giving me 2.55 risk to reward ratio. So this was my first target, guys, and I knew this. So using the fib extensions, I knew where the market might go. So what I did is I used the fib extension here. You can see this fib extension. You take the Fibonacci from the low to the high, right? So that you can be able to spot where the market might end up, might go. So I knew. So the market here, I knew one thing, that the market has to complete the channel. So basically it was complementing with the fib at negative 0.272, and also now negative 0.272. It was also complementing with the fib. So I knew this is my first target, guys. So this is why I took the trade with the team, and I'm still involved, but I told them to leave here because I knew that now this one I'm risking it on my own. You know, I'm risking it on my own, and it has to go there. It's going. What I did is I also gave them a trade at the break here, so that they can take it to the upside. As this, I use this as that target. So this one was my first target, and this is my second target. So you can just see that the market now is reacting nicely. The market is moving. It has been moving since yesterday. It gave me this big candle, then it started acting up around these areas, but now it's even moving and it's approaching my first take profit. So what I'm identifying, since this is a training market, I'm identifying this. This is what I think the market might do. It will go to this area, then to go to that area, then come back here to retest. Yeah, to retest sort of, and then shoot to finish the Fibonacci 0.618. So for those who feel like they're left out in this trade, I feel like this is how you might utilize it. Might leave the market here to come back here. If you take the fib again, let me clean this. This is what I feel like the market is going to do. What I see in the market, what I see that the market is already has already started. So I feel like the market is about to give us a retrace around these areas. Here you can see that it also complements with 0.5 and 0.382. So if if you guys are interested in taking this trade, I would say give it time now. It has already left. Don't let FOMO put you under pressure. Let the trade rise and come back for another retest, so that it can end up completing the Fibonacci and extension and reaching out for the second target, which is negative 0.618. Yeah, that's all with the Audcad. So a quick update on the Cadjpy. This trade is already running, guys. It's already running, and it was a beautiful trade. It's a beautiful trade, and I've already taken the trade, because you can see. So here in the figure, I was identifying this market from the weekly perspective. So in the weekly, I identified that, okay, the market, you can see it formed another thing, the one thing correction. It was a descending channel, then it broke out. The market was highly volatile. It kept pushing up, so until it reached this area of importance in the weekly. That's a high value area. Sorry for that. This high value area, you see how the market reached this. It's a high value area. So when the market got here, what it did is when I identifying it and zooming in, zooming in, it gave a rejection, a couple of rejections. Then it gave an inverted hammer, then it gave a hanging man. This were additions to me that the market might reverse. The market might give a structure, might reverse, might give a structure. Something is happening. I knew that something is happening, so I identified the structure on the lower time frame. I was able to spot, oh, this is what the market is doing, because the market was already giving me the correction here. So I knew, okay, this is what the market is doing. So for it to complete the weekly structure, for it to complete the ascending channel, it has to complete the 90 rule. So I know that the market has to come to this area, to the next resistance. It has reached this area. I'm expecting the market maybe to come to this area. So here, somewhere here, or somewhere here, somewhere here, for this one's come somewhere here, because here traders were just being caught on the wrong side. Yeah, so breakout traders were getting caught out and all that. So I'm expecting the market to respect these areas, so which is why I was identifying the structure and adding it to my co-influence. I knew as an added confirmation that this is how the structure should be. This is how the structure should be. This is sort of an ascending channel and the ascending structure, which shows in momentum. The momentum of the momentum of the pair is just low. It's going down a bit by bit. So going to the H4, this is what I identified. At first, what I did is, the market was forming this correction, right? The market was going somewhere, it was forming this correction. So when the market was forming this correction, I identified, okay, the market made first touch, second touch, and this was sort of a falling wedge, or a descending channel, as somewhere I identified. So my second touch, first touch, second touch, third touch, and fourth touch. So here the market already made the first touch, second touch, and then it was about to, it hadn't made, when I was analyzing it, it hadn't made the third touch yet. Because you can see my TP has been hit and the market is still moving up, and I've locked down profits, and identifying here on the H1 so that we can be able to spot where I entered. So when the market got here, because the market was basically respecting this low here, so I knew that this was supposed to, if the market it didn't respect this correction, I knew that maybe traders were about to be, there was a stop hunt and traders were about to be caught in the wrong side. You know how the market works. I knew that those things are possible, so I didn't lose hope for the buy setup, because I already shared it on the Telegram channel. So I didn't lose hope. I looked at the pair again, and when it broke out impulsively like it did here, I was saying, no, but this structure is for buying. It just gave me a buy setup here. So let me just calm down and be able to identify what the market is doing. So when I was looking at H1, I realized there was an inverted hammer here. There was a hammer here also formed a reaction. So I was waiting for the H4 confirmation, and I was like, let me wait for H4. When the H4, as you can see, the H4 closed. This is how the H4 closed. It gave this hammer formation, and also this is a bullish hammer. Some identify it as a bullish hammer, but I also see some formation of a hammer on it. So I said, okay, let me do this, let me take this trade, because it was forming the other thing that I identified. Let me take this trade and see where it goes, see where the trade might take me. So I just set my TP to the next area of resistance only. I didn't even want to take it that far, because it's a day trade. I wanted to do a day trade. I wanted to just be in and out of the market. But what I foresee with Cadjpy is here, I see the market moving to this area. I see the market moving to this area and maybe making a form of correction here, coming to this area and making a form of correction here, coming here, then start maybe reacting like this, forming a structure and forming something like maybe another pattern which will give you an upward, a downward move. So I'm expecting the trade to come here, maybe give us an ascending channel, a double bottom, the likes, head and shoulder, you will identify it, and then start falling. So this area is looking at the last area of resistance. So I feel like the structure is going to be like this, and when the market gets here, traders might be caught on the wrong side to this area of resistance, then the market will now drop to the downside. So I'm identifying Cadjpy here. So if you feel like this trade is you are able to make sense and you are able to understand what I'm saying, right now it's late, and it's latest for UDCAD is already late, so we might wait for the market to finish up the structure, break out of the structure of this descending channel, then you'll be able to take this trade, break out, retest, or yeah, break out and retest the structure. Then that's when you can be able to have confidence and start looking for candlestick for confirmation and other confirmations of your strategy, and take the trade and make this your first target. You can make this your first target, yeah, because it will be completing the ninth rule. Make this your first target, then after that, this is when you can take it up to the down, or when you get here, you start looking your profits and or wait for it to go up again. So this is what the market is saying, guys. This is what the market is saying. This is what I was able to spot with Cadjpy and the Audcad. So I hope that you guys find this video really educational and you are able to learn from it. And if you are an advanced trader, you can easily comment below and tell me what you are thinking, how is your strategy, what is your strategy telling you, and how you see the charts, and what is the market telling you. So this is what I came up with. This is my conclusion, guys, and I hope you guys love it, and see you on the other side. Good week. Have a blessed week, have a good week, have a very profitable week, guys, and let's just keep pushing them. It's not easy being a trader, it's not easy being in the market, there's so many things that are happening, but as long as we push, guys, never sleep, everything will come together. Peace out.